Electric light bulb. Did you know the global carbon credit market is expected to surpass $100 billion by 2030? And some early investors are already cashing in. But here's the million-dollar question. Can you actually make money from carbon credits, or is it all just hype? Today, we'll break down the fast-growing carbon credit markets, how they work, where the profits are hiding, and the hidden risks that could burn unwary investors. Right pointing backhand index. By the end of this video, you'll know exactly how carbon credits are created, how they are traded, and whether they deserve a place in your investment portfolio. Let's start simple. Imagine a factory that produces shoes. For every shoe produced, a certain amount of carbon dioxide is released. Governments and international agencies now say, if you emit, you must pay, or offset. That's where carbon credits come in. A carbon credit represents the right to emit 1 metric ton of CO. Companies that pollute more than their quota can buy credits from those who pollute less, or from projects that actively remove or reduce emissions, like reforestation or renewable energy farms. Think of it as a permission slip for pollution, only now, that slip has a price tag and can be traded like a stock. Stick with me for the next half hour and you'll leave with a clear roadmap, how carbon credit markets grew, how investors, big and small, are making profits, and what to watch out for so you don't get caught in a greenwashing trap. Why does this market even exist? Globe showing Europe-Africa climate change has forced governments and corporations to find market-based solutions to reduce greenhouse gases. The concept started in the Kyoto Protocol of 1997, which introduced carbon trading at a global scale. Fast forward to today, the European Union Emissions Trading System, EU ETS, is the world's largest carbon market, with prices crossing €90 per ton in 2024. In the US, states like California and the Northeast have cap-and-trade programs. Emerging markets, China, India, Brazil, are rolling out their own carbon exchanges. The market is now worth tens of billions annually and is projected to multiply as more countries commit to net zero targets by 2050. Real-world example, in 2023, Microsoft purchased millions of dollars in carbon credits to offset emissions from its massive cloud operations. These aren't just feel-good moves. Companies face regulatory pressure and investor demand for climate action. Carbon credits are the financial instrument making it happen. How carbon credits are created and traded. First, how do these mysterious credits come into existence? Right pointing backhand index. Step 1. Project creation. Projects that reduce or capture emissions, like solar farms, wind farms, or forest conservation, apply for certification. Right pointing backhand index. Step 2. Verification. Third-party auditors ensure the project really cuts or removes CO. Right pointing backhand index. Step 3. Issuance. For every verified ton of CO reduced, 1 carbon credit is issued. Right pointing backhand index. Step 4. Trading. Credits are sold on regulated exchanges, like EU ETS, or voluntary markets, like Vera or Gold Standard. Case study, a reforestation project in Kenya generated millions in credits by protecting endangered forests. These credits were bought by airlines to offset passenger flights. Think of it like an IPO for trees. Instead of shares of a company, you're buying shares of climate impact. How investors profit, and the billionaire playbook. You're probably wondering, okay, but how do I make money? 2 main routes, speculation, buy credits when prices are low, sell when demand spikes. Example, EU carbon prices jumped from €25 in 2020 to over €90 in 2024. Early traders pocketed huge gains. Carbon funds and ETFs, several funds now track carbon credit prices or invest in carbon reduction projects. Electric light bulb billionaire example, Bill Gates-backed Breakthrough Energy invests heavily in carbon removal startups, betting that credits from these projects will be in high demand. AAP Sok Rohi Honch, is this like trading oil futures? Yes, but instead of barrels of oil, you're trading tons of avoided emissions. It's a new commodity class. The air we breathe is now an asset. Risks, criticisms and greenwashing. Of course, it's not all smooth sailing. Risks and cons, volatility, prices can swing widely with policy changes. Greenwashing, some projects exaggerate their carbon savings. Regulatory uncertainty, a change in government policy can wipe out market value. Short story, in 2022, several rainforest offset projects were exposed for overstating carbon benefits. Credits lost value overnight, and investors saw big losses. Analogy, it's like buying a gold bar only to find out later it's gold-plated. This is why due diligence and credible certification are critical. So what's next? By 2030, analysts expect global demand for carbon credits to quadruple as more nations adopt net zero mandates. What if scenario? What if major economies introduce a global carbon price floor? Prices could skyrocket, making early credits extremely valuable. Opportunities, early-stage carbon removal technologies, like direct air capture, could create premium credits. Carbon futures trading may become as liquid as oil or gold markets. But remember, if carbon markets face scandals or political backlash, prices could crash just as fast. The key is balanced exposure. Don't bet your entire portfolio on this emerging asset class. Let's wrap up. Today you learned what carbon credits are and how they are traded. How investors, from retail traders to billionaires, are profiting. The very real risks of volatility and greenwashing. Electric light bulb memorable takeaway. Carbon credits are turning climate action into a tradable commodity, but like any market, the rewards come with risks. If you found this breakdown valuable, hit like, click subscribe, and tap the notification bell so you don't miss our next deep dive into cutting-edge finance trends. And tell us in the comments, would you invest in carbon credits? Why or why not? Until next time, invest smart, and stay green.